Dzień dobry. Witam
Good
serdecznie.
morning. A heartfelt welcome to all of those convened in the room in Misha Street, as well as those watching us online. Traditionally, we're meeting in these circles to discuss the operating and financial results, this time for Q1 2019. And at the table with me are Mr. Henryk Baranowski, CEO, Henryk Wojtowicz, CFO, I'm Kuba Freidlich, Investor Relations Director. By standard, briefly, we will present the presentation, and you will have probably partially have gotten acquainted with it. Then we'll pass on to the questions. First, the questions from the room. Next, questions asked online. If they recur, I will, with your permission, address them after the conference. So, without further ado, over to you, Mr. President. Thank you. Welcome, everyone, those in the room as well as those watching us through electronic media. With your permission, I will present the financial and operating results briefly, although they are probably very well known to you after our estimates. In Q1 this year, we definitely increased our sales revenues. This is a consequence of 100% exchange obligo and greater turnover in power at the wholesale market. EBITDA and net profit have been under pressure from external factors that will be discussed later on by Mr. Wojtowicz. I wish to draw attention to the fact that EBITDA is lower than in the previous year, but it's still at the level from 2-3 years ago. And let me remind you that then EBITDA was supported with the revenues from KDT. Operating results are first of all a derivative of the weather situation in Q1, which is called the winter quarter. However, it was rather winter by its name than as per what we could observe over the first 3 months of this year. That's why we had lower power generation volumes as well as those of heat cells. A couple of words I also would like to tell you about our activities with regard to group transformation. First of all, I'd like to emphasize that we are continuing the process of developing the Dolnia Odra power plant, and in the next period we will be launching a proceeding to identify the general contractor for that investment. You will have heard probably also about our plans regarding the development of photovoltaics, with a goal that we have defined at the level of 2.5 gigawatts of installed power. This is of course a longer prospect reaching 2030. However, it is important that we have already taken the first steps toward that goal. Over a week ago, we signed an LOI with Azoty Group companies to construct a photovoltaic farm with a power of 5 megawatts. This is currently the largest plant of this sort in Poland. Let me also draw attention to the fact that this is the first installation ever based on a PPA, purchase power agreement. I'd also like to devote a couple of words to our new plans regarding the circular economy as a result of the generation of electricity and power. A lot of UPSs are formed, such as slag, ashes and synthetic gypsum. Owing to their physical chemical properties, UPSs for years have found their application as full-blown products in many branches of in many sectors of the economy. For many years we've been observing a growing demand, and we expect for this to keep dynamically growing. Among the sectors that appreciate the use of those projects are the production of cement, civil engineering, as well as farming. We additionally wish to increase the sales of products formed based on UPSs. Importantly, PGE Capital Group is producing only 2/3 of all the UPSs, as well as furnace waste and synthetic gypsum in the country, which gives us a lot of potential to grow our value and business in the country. We wish to combine that topic into a single business line, because owing to this we will be able to obtain better synergies than as of today, and all our possibilities will be hopefully fully utilized in this respect. The formation of a strong entity to implement a circular economy is not only a necessity, but also, let's face it, a huge opportunity for the entire PGE Capital Group. By the end of the year, we wish to arrive at the fact that a dedicated, special, single company should be dealing with this topic belonging to the Capital Group. As always, a couple of words about our key investments. Let's start with Opole. We're just in the process or finalizing the two largest investments of the PGE Capital Group. As I mentioned, this is about Opole as well as the new unit in Turów, which I will discuss in a moment. In Opole, on unit number 5, currently a test of 120-hour continuous work test is being run, which is coming to a close. Obviously, the exact commissioning time, which is a very important event for this, and we will diligently publish this information in line with the remit. However, I can confirm that everything is very close to start operating unit number 5 of Opole power plant. You will have noticed that we have also commenced or we have synchronized unit number 5. In practice, this means that unit number 5 has started power generation already, and in line with our plans, which it looks like they are safe as of today, it will be commissioned and put into operation by the end of September. The commissioned units will be emitting much less than the currently functioning units, but also the currently functioning conventional, as well as the currently operational conventional energy units in Poland. Nearly 25% lower emissions in CO2. That's smaller load, and it also means increasing the profitability for the group owing to the lower power generation costs for the group. Another investment, Turów, the advancement of the works covered by this investment, as per the current report of the contractor, reaches 90% in Q1. Towards the end of March, we concluded an annex with a consortium of companies dealing with this project. We've informed you already about the necessity of adjusting the technological adjustments. Consequently, we have an adjustment of the price and the deadline of commissioning by a couple of months. On the operating node, assembly works are being finished and the unit is being prepared for the running phase. At this moment, I'd like to give the floor over to Mr. Emil Wojtowicz. Thank you very much. Welcome, ladies and gentlemen. To start with, as usual, I will start with what was going on in the power system, in the energy market because that was a very interesting quarter, a unique first quarter, because it was probably the first quarter for a couple of years with a decrease in power use in our Polish system by 1.5% of energy less were used, and this was clearly connected with the fact that the quarter was rather warm. On average, the quarter was about 3 degrees centigrade on average warmer than the previous year, but for instance in March it was by about 10 degrees, and this is clearly visible on our graph. How the energy use changed along with temperature. Other than having used less energy, there was a little bit more of imports by about 0.2 terawatt hours. These two quarters caused for various power plants in Poland to produce about 2% less of energy, that's to say 0.08 less of terawatt hours. Now I will explain to you how it impacted our facilities at PGE and the very energy market. Q1 was also the time when prices in forward contracts dropped as compared to prior year, obviously, but also with Q4 of the previous year. In Q1, the average price amounted to roughly 262 zlotys, whereas in Q2 it rebounded. It has rebounded, and now since January until May, a couple of days ago, it was 295, and now the average price was of roughly 268. So it is rebounding to the levels of Q4. One more figure, which we always provide, the average realized price in two segments realized by our entities. Because let me remind you that it's for the first time that we are identifying the heat segment. The average price amounted to 246 zlotys. I said that it was both a smaller consumption as well as greater imports, but there was one more interesting thing in that quarter, a huge generation from wind. It was greater by 1.5 terawatt hours than in Q1 of the previous year. So, to wrap it up, lower consumption, higher imports, and higher wind capacity meant that the whole system, in the whole system, the centrally controlled units produced about 2 terawatt hours less. And on this slide, we can see that our units, both lignite and hard coal-fired, were less laden and were idle for a greater number of hours. As you can see, on lignite, it was about 1 terawatt hour less in terms of generation times the price, which I provided on average, which is 246 zlotys. That's to say 240 million less in revenues. If you deduct CO2 from this, actually the other costs are fixed for lignite, roughly. So this explains how much our margin could have dropped as a result of both higher temperatures and higher wind capacity. This indicates how much weather can impact power generation and the energy sector, not only by impacting the lines, but also the generation by some power plant types. Of course, with higher winds, more energy was produced in wind farms. As you can see, percentage-wise, that's a large increase, and both in terms of volume and value, it did not compensate for the drop in conventional power generation. Passing on to the financials, EBITDA was at the level of 1,889,000,000. Then, as we pass on to our slide with a bridge, I will indicate the specific reasons that have caused the changes to the financials. Net profit at the level of almost 600 million. Let me stop here on the indebtedness, because it grew as compared to the year-end by roughly 2.3 billion, and that was for three main reasons. The first one were monetary and one non-accounting, as read. It's MSSF 16 has caused that various ISSRs have caused that all sorts of leases are recognized as assets. So this is about the necessity of recognizing, for instance, leasehold properties that we are using for our facilities, and the application of the accounting standard have meant that the accounting debt, as disclosed on the balance sheet, grew by 886 million. So that's quite a lot. 875 million zlotys. That's a significant increase in the debt, even though realistically nothing actually changed in the company. The other effect was the growth in EBITDA, because there are no costs that would relate to leasehold properties and perpetual usufruct of land. They are passed to financial activities, reclassed basically. Other than the accounting factor, two other factors was the necessity to pay for investments commissioned towards the end of Q4. We know that commissioning often takes place towards the end of Q4 because our contractors also want to recognize revenues in the prior year. That means that the payments for that are very often occur in Q1 of the next year. As we look at the 2 quarters together, Q4 2018 and Q1 2019, after subtracting the IAS 16,
czyli średnio na kwartał jest to około 700 milionów.
It's about 700 million per quarter, which is quite in line with our investment plan. The third sector, the third factor, the second realistic one is the CO2 settlement. The more we buy in forwards, in Q1, where we are meeting that obligation, the greater the cash difference between the fact that the costs are incurred in the or recognized in the year of generation, whereas the payment for CO2 takes place in the year of the supply, which is most often in the next year. So Q1 will now probably be involved with higher disbursements. Now, passing on to the bridge, as I said, the wholesale price of energy grew, but the volume dropped a little bit, so the revenues from the sales of what we produce, which is power and heat, grew by about 700 million zlotys. And let me draw attention to the element which had a negative impact, and now it's returning to its expected levels. I'm talking about the portfolio optimization in electricity, in power. In Q1, that was the result was 60% better than in Q1 of the previous year, and here we expect this to return to the expected levels. The revenues from the sales of heat and energy were larger by 700 million. As for the fuels, hard coal, natural gas and biomass are at the same level, but owing to the greater CO2 emissions, both owing to the price increase and the lower volumes to free emissions, these three elements of the margin as accumulated have meant that the margin was greater by about 60 million zlotys. Two other important factors was a lack of support for cogeneration in Q1. In the previous year, these were revenues of roughly 170 million, and we expect that once the appropriate regulations are passed, we will be able to recognize revenues owing to supporting generation as of January the 1st. However, those amounts will probably be lower than in the previous years. Another important element is the margin in the retail retail market. So there are two components, one of them involving the lack of price increase for G tariff recipients, and the other effect is connected with the lower market margins owing to the higher volatility given the contracts concluded last year. Personnel costs grew by about 10 million zlotys. That's a single-digit increase percentage-wise. The factors, operating factors, I've already discussed them partially. We can see them all together. And whereas availability was at roughly the same level, a little bit lower by 1.5 percentage points, for lignite, you can clearly see a decrease in the power utilization factor. Longer idle times, that's what I started with. Higher temperatures and stronger winds caused a lower conventional power generation. The flip side of that phenomenon meant much higher power utilization in our wind farms. It even reached 40% in March for the whole portfolio, which was probably one of the highest historical values ever noticed. In terms of distribution, a couple of words about it. There was a stable volume, more connections, which will also have its effect on the CapEx slide. We are decreasing the network losses on a stable basis. As regards the qualitative effects, SAIDI and SAIFI, March was advantageous since the wind blew strong and there was more wind energy. It was blowing, but no losses were incurred and no damages. Currently, a new model is being developed of a quality regulation. So, for as long as it hasn't been developed, we don't know how it will impact the prizes and penalties, which does not relieve us from a necessity of taking care of stability and quality of supplying power to our customers. As for CapEx, 1 billion zlotys, three most important areas are flagship investments in Opole and Turów. I'm not going to add anything more to what the CEO has mentioned. The investment scheme for maintenance and conventional power generation, that's the stable capex for maintenance of the units in our generation assets in the mines. So here we also have some expenditure on additional reserves in the mines. And the third one, distribution. It just so happens that in terms of distribution, since the quarter was warm, we could have started the work earlier and there was more of it performed, so the capex was higher than in Q1 2018. And there were also more new connections, more new customers. In renewable energy, we still don't see it so much in Q1, but work has started on our cluster project, which are the 3 wind farms in the north of Poland. Work has already started there, and probably from one quarter to another, there's going to be it's going to be growing, and this proportion of the pie is going to be higher. A look towards the future on the prospects. In conventional energy, we can expect increases. The average price, as you can see in Q1, it was at the level of the upper, towards the upper level, close to the ceiling in terms of the prospect. The flip side of the phenomenon is a lower volume. You see if but lower consumption is a lasting trend or a one-off phenomenon, and we'll come back to the fact that to a situation where our system will be consuming more and more energy, because as for the wind volumes, it's something absolutely unpredictable and we can by no way foresee it or forecast it. The lower utilization of our lignite-fired assets owing to the planned repairs and modernizations, the lower coal price, if we return to the normal generation levels, the value of all the cost will return to the normal level owing to the higher prices, and importantly, the higher prices, fewer free emission rights will be charged to our margin. But all in all, we expect a higher EBITDA in conventional energy than we had in the previous year. In terms of district heating, unfortunately, it's a decrease because both the tariffs don't transfer the entire cost, as we discussed it in March while presenting the annual results. And there are still no regulations for the support programs, but we still expect that for the existing assets, that support will be more modest than it was the case previously. In terms of renewable energies, the higher EBITDA owing to, for instance, much better results in Q1 and higher energy prices, even without assuming that in the next quarters the wind capacity will be much higher than average. For the entire year, we expect a higher EBITDA. In terms of trade, last year we already created provisions, and that lowered the profit for the previous year. For this year, we expect stable results. We expect the final arrival at the compensation system and the ultimate solutions for the price on lowering energy prices. And we expect for the trend to be maintained, that's to say, lower margins. In terms of distribution, despite a slightly higher result in Q1, we expect that owing to the cost pressure, the results will be slightly lower than in the previous year. And at this point, I will give it over to Kuba, who will start the Q&A session. Yes, and I'll be happy to give the floor over to you. Thank you for the presentation. Grzegorz. Okay, so a brief technical question perhaps on what was presented before. That's about the distribution. If the tariff was in place for distribution as of the beginning of March rather than April, and if it should go up, and should we forget about Q1, would that arrow still be downwards, or would it be more flat? If we're talking about the new tariff period, it wouldn't be flat. It would be slightly downwards, and this time the reason for the lower expected results, it's not so much about the tariff, it's the fact that the tariff did not contribute, did not transfer the cost to this, and it doesn't bring it. That's the regulation model. Why did it happen? Because in the discussion with other energy group, we raised this issue, and they don't see any problem. I mean, other groups claim that they were able to transfer all the costs in their entirety, and they expect flat or better distribution results after the tariffs have grown. I'm not in a position to comment on the forecasts of other groups. We will be watching their results closely and attentively. It probably also depends, especially in terms of energy purchases, on network losses, what it looks like within the group, because here you probably can transfer the margin a little bit less here, more there. We apply the Transfer Pricing Act, and we also settle those things at arm's length in our group. Thank you. Christian Promory. 3 questions, brief questions. The first one, because on slide 20 you have an explanation for each segment. There is no explanation for other. So there's a lack of these other elements. How much of this is contributed to losses connected with close downs, and so how much of it is contributed to? It's here? Yeah.
Tak, z dużych wartości tam
On the major amounts, there's 2 of them actually.
Jedna rzecz jest tam
One thing is the reversal.
Odwrócenie odwrócenie rezerw, które były
reversal of provisions that were created for the supply segment. On a historical note, in I understand what it is, but what amount is it?
To jest kwota, powiedzmy, około 100.
That's about 140 million. And 40 million are losses on the remaining business lines. These are various consolidation adjustments. These are not losses. As I understand, in the remaining segments, they contributed positively to the EBITDA. Could you please try to explain why that's minus 40 million in this case? And whether it's repetitive or a one-off thing, or was it like a slump? Well, we try not to have any slumps, any mistakes, so I'm not going to split it into other amounts at this moment, because there are quite many. Among major things, there's 140 million of a provision reversal. Okay, thank you. Now the question about volumes, because you lost 1 terawatt on lignite in Q1, in April was minus 0.5 terawatt as per PSE. Could you give some guidance what it might look like in the next parts of the year? How much of the volume are you going to lose? April was also lower in terms of lignite-based generation. What it's going to look like further through the year? We're in for summer, which might be hot, and then it will be high generation, or it might be cold, and then the generation will be lower, and if it's windy, the generation is going to be even smaller. We're not weather forecasters. We also don't have volume forecasts. Owing to the maintenance plan, we expect 1.2 terawatt hours less throughout the year. So additionally, these are those 2 terawatt hours that we discussed. It's not additionally, it's 2 terawatt hours that we discussed in the outlook for March. It's a confirmation of the outlook. And in terms of those volumes in April, was it also impacted by the running of Opole power plant? I don't expect for Opole to be ousting lignite-fired power plants. And the last question, district heating assets appeared in the market. It's probably Taurun and ICS. Are you interested in increasing the cogeneration power plants? I hope I won't be disappointing you by what I say, but at this moment we're not going to discuss this. First, they have to be placed in the market, then we will have to consider whether they would provide value added in our value chain, and based on this we will be considering on this asset or another or some other assets that might appear in the market. Paweł Puchalski, Santander. The first question, you received free 11 tons of CO2. When are we going to see it in the results? When are you going to use them, or are you going to distribute them proportionately from Q4 2019 till Q4 2020? Okay, one by one. We will be able to see them in the results for Q2. That's when we received them, and they will be distributed in line with our internal regulations. So let me come back to the question whether an analyst who doesn't have any look into your internal regulations, should they expect an even distribution over the quarters, or will it be a major hit in the single quarter? Because I will soon be preparing my prospects for Q1, and 11 million free certificates does have an impact on the result. It's like we did not disclose our policy with regard to energy hedges. We don't reveal the results of our CO2 hedging policy. In the results, we expect this to hit the result in Q2 on a one-off basis. Thank you. Another question, which EBITDA impact can you expect from the Apollo units in 2019, and more importantly, what effect can you expect in 2020 when they should be working in full swing? In 2019, if the continued work period is finished, which we expect very much, then Unit 5 will be part of the EBITDA, will be contributing to the EBITDA as of Q3. Unit 6 if everything goes as planned, it will probably start in Q3, but later, toward the end of it. And that should be it. Okay, to make it shorter, in 2020, which positive impact on EBITDA can you expect from the two commissioned blocks? The positive impact, there's two aspects to that topic. The first one, who these two units will oust from the market. Everyone can have their own theory. If we assume that they will push out our older hard coal based units, then it will have a positive price. I mean, owing to the higher efficiency, so less coal per terawatt hours or megawatt hours, in other words, a greater margin on hard coal per megawatt hours. Okay, one more question, in whether in 2020 PGE expects to pay a lower price for per 1 ton of energy coal, or do you expect this price at a flat level? It's roughly flat, because the main contracts for coal supplies are long-term contracts. There is some indexation involved, and probably the final cost per ton that we will be burning in 2020 will be both impacted by domestic and imported coal. Thank you very much. Jakub Skarbec, TFI. Thank you very much for the presentation. Could you please share with us what you think about the current market valuation of the company? Well, we've exchanged looks. I'm not sure if we can. Yesterday's closing was at 8.58. I would reverse that question, because there are so many smart people in the room. So what those of you looking think about this pricing, because we're probably somehow mentally involved. So we believe the company is worth more than what the market is paying at the moment. And could you share with us where it comes from, that it should be worth more than the market evaluates it? Probably this year and the next year will be the most difficult ones. So soon the energy exchange will be launched. That will also contribute to the company's results, or will impact the company's results, and probably the current valuation involves many, or includes many risks that you gentlemen, ladies and gentlemen, have mentioned in your reports, that are taken into account by investors. And we try to develop and increase the company's efficiencies. At all times we're developing the offshore program, developing the gas-fired power plants program. So I think that PGE still has a large value potential ahead of it. Thank you very much. I understand. Okay, by way of comment, there's an obvious difference between the investment horizon of equity and debt investors. We issued bonds last year where we observed record-breaking demand, especially for 10-year bonds, where we provided very good funding conditions, which we emphasized during the issuance, and also after the issuance, and a diversified group of bond investors, because we have to emphasize that these were three very strong investor groups, have given us their confidence by giving us 140 on top of the variable rate. So that's the first 10-year bond with a very good rate of return and very good distribution among investors. So long-term investors seem to trust us. Michał Koźmiński, I'll ask you about long-term. In the previous presentation you showed to us how you planned to replace unit conventional unit decommissioning by planning greater investments into gas-fired units and in terms of wind. And in my opinion, this will be enough to replace what you'll be dropping from your production over the next decade. Do you have an idea? And what are the talks about the lignite units at the beginning of the 2030s? Do you already have a vision of what you should be replacing them with? We do have a vision. It's probably no surprise to anyone that we're working on updating the strategy. We will be launching it. We'll be announcing it in autumn, and in that strategy we will also address this question. So as of today, is there any probability? We're not going to reveal what we will be presenting in the strategy ahead of time. Please be patient with us. It's only a couple of months. I think all the responses will be visible in the new updated strategy for the years until 2030. That will be the horizon of the new strategy. And how do you perceive the dividend policy as of today? Do you think PGE might return to dividend payouts next year? At this moment, the same policy is in place, which assumes that from 2020, so including the profit for this year, the dividend will be paid again. So, given the current market parameters and the investment policy, if that dividend was to be paid based on debt, would the company be prepared to paying dividend based on debt? And what would say your debt investors? Would they like the idea? I mean, paying dividend based on debt going forward, and what is the leverage level that you would still feel comfortable with to increase indebtedness to pay a dividend? Well, I will disagree that dividend is paid based on debt, because I should say that dividend is paid based on profit, and debt is used for investing. You can take various looks at this. And as regards the leverage level, we're working with a view of not increasing the debt to EBITDA ratio of 3.0. 3.0, is that right? So, by following that thought, we pay the dividend based on profit, we fund CapEx based on debt, so in that situation we can return to paying out dividend in a year when the company is not generating positive cash flows until the moment when we reach the debt to EBITDA ratio of 3, and you have to revise the dividend payout policy, or so this would also involve this. Yes. Okay, let me remind you the company's dividend policy. That's 40 to 50% of the consolidated net profit after all the charges. There's a whole paragraph about this, but we also consider two other elements: expected acquisitions and the indebtedness level. So in that case, to go along the lines of acquisitions, there have been press mentions of ČEZ assets, which are potentially available. Is that something that would be of interest to PGE? First, we need to know exactly which assets could be acquired. That's the first precondition, because right now the message is quite general, at least that's what I've seen. And secondly, as I mentioned, we're in for, we have to wait and consider which of these assets could be potentially of interest to us if anything like this should appear in the market. As of today, we are slightly underinformed in this respect. Okay. As for the dividend policy, assuming that it's going to be 30, 50, 60% of the profit, let's assume it's 50% of the profit to be paid out as dividend. And once the dividend appears, again, alluding to the price, if the dividend yield low share value, stock value, if it were like 12 dividend yield, would you still pay out, or would you take a look at this? I mean, that Energa used to pay a very high dividend, then it curtailed it by 85%, and the market price also dropped by a similar value, and then you claim that the yield was still very high. Mathematics never lie.
O naszej polityce mówiłem,
there are no lies in mathematics. Okay, so I've told you about our dividend policy. There is nothing like a yield. At the end of the day, it's not the board that makes decisions on the dividend. It's the general meeting. If the shareholders decide that there is a dividend level, well, if the dividend level is too high, then they can also adopt a resolution as to a different amount. Our dividend policy does not involve the yield element. The last question about the dividend, approaching the thing that dividend is paid based on profit. Within that profit, well, that profit will be contributed to by Mr. Smith, who pays for, or John Doe paying for power. How will the ministry look at this when the PGE dividend is paid by John Doe or John Smith, paying for power because PGE has to rebuild its or restore its power? We've been asked about our various opinions on various ministries. We try not to comment on them. If you need to ask a question to a ministry, I would suggest that you ask that question to the appropriate addressee. Thank you. I would ask you about the fixed costs of Apollo, because I understand there was a question about EBITDA. So perhaps a better question is about the fixed costs of those two units once they are commissioned, that once they are put into operation. You're probably asking about fixed cash-based costs rather than depreciation. Yes, exactly. Since these are modern units, and obviously in the first years, both, well, there will be repairs and maintenance will not represent a significant cost. And there is also a need, I mean, there are lower manpower requirements than in the older units, so they are not only more efficient with regard to power efficiency, but also with regard to fixed costs. Okay, thank you. So I will ask Kuba about the exact amount later on. Bartek Sofczan. 3 questions, if I may, but shorter and sweeter. The first thing, I've been asked, and I couldn't answer that question really, about your cost efficiency, something that you once presented in your strategy, that probably in 2019 or 2080 the cost should drop by 500 million zlotys, and we've never seen a slide presenting at which stage you are of that cost cutting. Could I ask you to summarize what it looks like, whether it is taking place in the first place, whether there are such savings. There are two, shall I say, or three factors that have an impact on our achievements in this respect. The first one being that we try to tighten the cash circulation in the group. There are many entities that buy different things, and they also have quite a lot of fixed costs, and we first try to take advantage of the potential of those groups for the purposes of services and works among the companies, also among the segments, which was not so obvious before. So if there was a company operating in a segment, it would only work for this segment and nothing more. So that's the first element. Secondly, we keep working on the approach to renovations and maintenance, about the meaning of the assets within the group, rather than using all the assets for these purposes. And these two factors have an impact on reducing the group costs, but probably above a fourth of our fixed costs are represented by salaries and wages, and the market situation has not exactly helped us to disclose this. I mean, in terms of reducing the costs with regard to their amount, we're trying to make sure that this cost item, such as personnel cost, should not increase excessively. Okay. Second question about clean dark spreads. Given the 20% increase in coal price, I mean, I understand it's coal price plus transport. What do they look like year on year? Are we talking about major drops in terms of hard coal-fired plants, or are there some other bridges, positive bridges? Well, for us, the main fuel is the lignite. So there the spreads are calculated without the fuel prices. If we look at hard coal, I'm not sure if the better reasons for decreasing the spread was not, I mean, other than the coal being more costly, it's also the less stable work of the units, individual units, in the sense that they're increased, the generation is decreased, so this is not working at a base, it's rather sub-peak load working, which does not have the best impact on efficiency. So not only is coal more expensive, but probably some decimal points of efficiency can be lost because of that. Thank you. And the third question about the market, or actually the PGE market, you want to enter that efficiently. How do you actually perceive that market? What is the potential for power in Poland? And because 2.5 would be potentially 12+% of the market, with 20 being the target. Do you have the capacity, the resources to achieve that, because usually the increases tend to be single-digit than two-digit. And the last thing, I assume that there are a lot of micro installations being put in place countrywide. Do you have any estimates as to how many of them there are? And can you already observe some impact on energy prices, the working on the grid? So, I mean, of those micro installations, or is it still too early? Let me start with the last one. I think it's way too early to observe the impact on micro installations on the prices, the working of the grid, and the efficiency, reliability of the grid, because that's all involved. As to how many installations there are, how many of them have been connected, I think, I don't remember, quite frankly. I think Kuba will find this answer and provide it to you. And as regards the potential of photovoltaics, it's indeed dependent on energy prices and the drop in the technology prices, which, as we can observe over the last couple of years, has been rapidly decreasing. The question being whether that trend is maintained. As for the resources, especially human resources, I wouldn't worry. There's a lot of interest of various companies in cooperating with PGE as to this technology. Okay, if I may ask the last question. Some time ago, right after the acquisition of EDF, PGE announced a major investment program in district heating, multiple billion multi-annual program. There was both about the grid and taking over new units. Could you update us on where we are on that plan? That was an official presentation, the slides you talked about billions of new investments. We talked about the horizon of up to 2020. As of today, we have finished the first stage of that strategy. We've integrated all our district heating assets in a single entity. That's PGE Energia Cieplna, Heat Energy. This has taken some time. Since January the 1st, all our assets have been integrated. At the same time, we're seeking and conducting negotiations about acquiring new district heating networks or generation installations of various sizes. We're not going towards the level of ČEZ or Tauron in terms of district heating. These are two totally different projects. So we would like to expand our business by the distribution segment, and as we've said in the strategy, to combine distribution with district heating for reasons which are not quite dependent on us. It rather depends on local governments. These talks are at various stages. I think we will be informing you about each and every event, whether smaller or greater, that will be going on soon. We have I think we presented a brief update, as we presented probably the results for Q3 about the locations that we talked about. Probably Czechnica is the closest one to being concluded in terms of cogeneration, in Wrocław cogeneration. We're not talking about organic growth, because I understand the question was not about organic growth of our current assets. It was rather about whether we said that we would be trying to expand into the district heating market in the country. Such work is underway. We can already see some success stories on the horizon. I don't want to get into details as to the exact places because such information does not always have a positive impact on the condition of such talks, but we haven't forgotten about this, and work is underway. Thank you very much for coming. Thank you very much for your attention. If I may add one more sentence, because we're being followed by the financial world. It's not only equity, but also the debt sector. I'd like to take this opportunity devoted to the results to thank those who have invested in our bonds for their trust. And I think it's going to prove to be a good investment for them. Thank you very much. And on this optimistic note, we're finishing the conference after Q1. Thank you and see you again in August.